So this series is targeted at those who wish to develop a basic understanding of AI concepts, including ethics, regulation, and use cases. This is the second in this series, which today is focused on AI and ethics. And the recording of the first, in case you missed it, Introduction to AI in Insurance is available. And following today's session, the third session is AI regulation, which will take place on the 17th of February, and that's delivered by Anne Muldoon of the Central Bank. And the final instalment will take place on March the 3rd with Gary Layden of Instech presenting on the use of AI and an industry perspective. So now I'd like to introduce you to today's lecturers. So we're delighted to be joined by Professor Daniel Malan, who is Director of Corporate Governance Lab at Trinity Business School and is a Fellow of Trinity College Dublin. He specialises in business ethics and corporate governance and is co-founder of Integrity IQ, an AI-driven integrity platform. So Daniel authored Power and Corporate Responsibility, which won the 2024 Academy of Management Best Book Award. He received the Trinity Business School Research Excellence Award in 2025, and he is an Associate Professor Extraordinaire at Stellenbosch Business School. He's also been a visiting scholar at both Wharton and Mendoza College of Business. And Daniel has served on the World Economic Forum's Global Future Council and has worked as an Associate Director at KPMG Forensic Accounting. He holds a PhD and 2 master's degree from Stellenbosch University in South Africa. And we're so delighted, Daniel, that you could have the time to join us today. We're also joined, which is really important, by some industry expertise. So Jennifer Loftus is an actuary and accountant with more than 20 years experience in the insurance industry. She holds an MSc in data analytics and an MSc in sustainable leadership. Jennifer is currently an executive director of Acorn Life, where she serves as Group Chief Financial Officer and Chief Actuary. She also serves on the board of VHI as an independent non-executive director, and Jennifer is a member of the Society of Actuaries in Ireland and their AI and Data Science Committee and Diversity, Equity and Accessibility and Inclusion Committee. And then we also have Pedro Serrano, who's an actuary with more than 25 years of experience in insurance. Previous jobs include working in KPMG, Grant Thornton, and several multinational insurance companies. He currently works as an independent consultant, supporting clients in a wide range of areas, including AI governance, ethics, and risk management. He is a co-chair of the working stream of IOPA's consultative expert group on data use in insurance, and was chair of the governance working stream in IOPA's consultative expert group on digital ethics. This is an incredible lineup of speakers that are here today to give up their time, and I'm going to pass you over to Daniel. Thank you so much, each and every one of you, for your time.
Well, thank you very much for that introduction. Good afternoon, everyone, from my side. Delighted to join you, and also very welcome to my co-presenters, Jennifer and Pedro, who will share with you that sort of deep industry knowledge as we go through the program. I've already mentioned and explained the menti.com. I hope that all of you have been able to join. If you could not join because of perhaps just using one device or mobile device, please don't worry. You'll still be able to follow the presentation, and we have a couple of slides where people who are joined and have used the code will be able to participate. If at any stage you drop the connection, you'll see that menti.com as well as the code appears at the top of the slide. And just to test whether this is working, I'd like to give you sort of 30 seconds just to enter your vote for your favorite city in the world. I can see Dublin is an early leader, and I will start a timer for 30 seconds to allow you to cast your votes. Ten seconds left. The technology seems to be working, which is great. And we seem to have a winner in Dublin with Galway, New York, London, Paris in joint second place. Thanks very much, everybody. You can keep adding some names, and we'll share all the slides I should have mentioned at the beginning also with you at the end of the presentation. The outline for this hour, I will give a brief introduction to ethics, and then talk about how that has an impact on insurance and what the effect of AI would be. As you would have gathered from my introduction as well, my main focus is ethics. I'm not an expert on insurance. I'm trying to learn as much as I can about AI, but I don't have any technical computer science or AI expertise. But I think it's important to try and connect these dots between ethics, insurance, and AI. We'll then hand over to Jennifer and Pedro for 2 use cases. Jennifer will talk about an underwriting case and Pedro a claims case. At the end, we'll have a Q&A, and as was mentioned before, please use the Q&A function on Zoom. You can enter your question at any stage. So by way of introduction, I had the privilege of participating in the World Economic Forum's Council on Anti-Corruption and Transparency a couple of years ago, and we developed this agenda for business integrity, trying to provide pillars of leadership action for companies who are interested in advancing business integrity. And I'll run through the 4 very briefly. The first one is a commitment to ethics and integrity beyond compliance. I think this is a trend that we see across all industries at the moment, that companies realize to simply have tick box exercises where they comply with the law or regulations is not enough. There's a need to move beyond that to really advance integrity. And that links to the second pillar of strengthening corporate culture and incentives to drive that process of continuous learning and improvement rather than just focusing on compliance issues and preventing misconduct. Pillar 3, particularly important for our purpose today, leveraging technology. This was developed at a stage when we did not have open AI and generative AI. So clearly things have accelerated since then. But the idea has always been that we should use technology in the fight against corruption or to advance integrity. And a useful distinction to make there, and I'll come back to that, is to talk about tech for integrity, where we use technology to advance integrity, but also the integrity of tech, where we have to think a little bit about the ethical components or the ethical dimensions of using and deploying this technology. The 4th pillar, talking about global challenges that we have, and merely re-emphasizing the point that some challenges like climate change, like inequality, and potentially also the opportunities and risks posed by AI are so comprehensive that you need collective action, either within particular industries or also through public-private partnerships for governments and civil society and corporations to work together to increase scale and impact. We usually talk about 4 different levels of business ethics. I'll run through this very briefly. The issue around systemic issue, the systemic level is where we ask the question, what is the most ethical economic system? And you can see that if it gets, we go down the rabbit hole of ideology, is it capitalism, is it socialism? There's no real answer to that, but we do need to think about the systemic levels. Within industry, we can always ask the question, how does my industry behave, including, of course, the insurance industry? But we know that the usual suspects there would be ones like tobacco, for example, or gambling or alcohol, that are legal industries but have their particular ethical challenges associated with either the product or service that they deliver. At the corporate level, we ask the question, how does my company or my corporation behave? And the name suggests already that this is sort of a corporate function, then corporate governance, corporate responsibility. We form an opinion about a particular corporation, whether they are ethical or not. And then ultimately, there's the individual level. I can work for a company with a wonderful ethical reputation in an industry that is squeaky clean, but as an individual, I can still engage in unethical or even criminal conduct, and therefore we have to think about that individual level as well. For our purposes today, I would like to argue that AI has become so comprehensive and that the impact of artificial intelligence is so great that it actually has systemic implications as well. We are seeing changes in the way the world operates, the way in which we think about technology, about concepts like truth or authenticity or creativity, that it has that systemic impact. The industry, of course, is alongside others like the controversial ones that I mentioned, or financial services or insurance. There's also an AI industry. We know the big corporates that are involved in this industry, and I've listed a few there, but I emphasize that it also impacts everyone else because of this systemic impact that artificial intelligence has on the business world. Just to give you a little bit of a sense of how companies are responding to this, this is a report that at the Trinity Corporate Governance Lab we completed last year with our knowledge partners, Mason Hayes Curran and FTI Consulting, looking at how the 50 largest companies in Europe are disclosing on AI in their sustainability reports or annual reports. And just very, very high level, one slide to summarize our findings for both 2024 and 25. You can see that the top performer here is strategy. Everybody has a strategy. Everybody is talking about AI and how they're going to build that into the way they do business. We've seen an increasing number of companies that have a dedicated AI policy. A vast improvement also in terms of board oversight, and slightly less, but still improvement in senior leadership paying attention to AI. Investment in training, so knowledge development, you can see also increased from 26 companies to 38 companies. And 2025, almost all companies are now disclosing AI use cases. We'll talk about 2 later today. And 30 out of the 50 had a reference to AI included in the chair or CEO statement. You can see the one laggard here is on the audit side. Only 5 companies mentioned that they've performed audits either through internal audit or using their external auditors. And we expect this to increase over time as methodologies become available. But this gives us sort of a useful oversight of what's happening within the European context at the moment. Now, I want to take a step back and talk about ethics. Ethics we can define as the ability or the commitment to do what's right. So it implies that we can distinguish between what is right or wrong. My attempt here visually is to put that into 2 boxes, black or white. But we all know from experience that that is not as easy as that, because very often, perhaps more often than not, we are confronted with gray areas where it is not immediately evident what the right thing is to do. This opens up the field of ethics, ethical theory, business ethics. It's been keeping humankind busy for thousands of years, so it's not something that we can discuss and resolve in a couple of minutes. But just to give you sort of a quick overview, when we talk about ethics and ethical decision-making, it's important to make this distinction between what is legal and what is ethical. They're not the same. The legal line, and lawyers in the room, please forgive me for this overgeneralization, but in most cases, I think we can agree that the legal line is a straight line, certainly less controversial than the ethical line, because you can refer to legislation, you can take things to a court of justice where a judge or a jury could make a pronouncement. The ethical line is a bit more blurred. In almost all cases, it would be on this side of the legal line. In a few isolated cases, you might see the legal line itself being subjected to moral scrutiny. But in most cases, you have this area then where it becomes a little bit more difficult to make a distinction between what is ethical and unethical. And you can see that we have this area in between, which is often the most challenging for industries and for companies, where behavior would be seen as legal, but as unethical. To take a few examples, bribery or fraud would be classified as criminal behavior against legislation in every jurisdiction, clearly also unethical. If we treat our colleagues with respect and dignity, that's on the other side of the spectrum, something that is always ethical and legal. But inside corporations, we deal with things that sometimes would be described as lawful but awful. So if you offer or receive an inappropriate gift, for example, that might be against the company policy, but it's not criminal, it's not illegal, and therefore we need to think about ways to manage this inside organizations. Thinking about technology, if you produce deep fakes using technology to commit fraud, and sadly there are increasing examples of where that happens, where videos have been created to dupe people into making unauthorized payments. An example of both unethical and illegal. In the medical field, we've seen the power of diagnostics and very, very uncontroversial examples of how AI could be simply a force for good. But then when we think about algorithmic bias, or in the educational field that I am, students perhaps using ChatGPT to produce essays that they produce as their own work. Again, the examples of the gray areas or the unethical examples that we need to try and regulate in some form. Now, I'd like you to, with that sort of very brief background, just ponder for a moment and share your experience in terms of where you think the insurance industry fits into this. We'll get to AI in a moment, but based on your own experience, how would you classify the insurance industry? And like before, I'll give you 30 seconds to respond. Well, this is great to see. So a few people disagree, but the vast majority of you would regard the industry as either somewhat ethical or very ethical. That's wonderful to see. And then the next question, this is really the last one where we are going to use Mentimeter. I'd like you to just take a minute and think about the main ethical issues in the insurance industry. This will be a word cloud again. So please try and don't use sentences, but just a couple of key words that we can see the themes that come out. And again, I will start a timer for 30 seconds. This is wonderful. We can see a wealth of examples being generated here, but clearly the main ones are the ones that you can see at the center of your screen: fraud, pricing, compliance, disclosure or non-disclosure, and fairness. And I'd like to move on. Again, thanks very much for this. You can keep adding, and you will get this as part of the handout as well. Just based on some basic research that I did, and remember, I'm not an expert in the insurance industry. These were a couple of things that came up, and I think most of them surely reflected in the previous slide as well. So we've seen fair pricing, this idea that you have to balance individual versus collective risk, that quite often, like in financial services, the low risks will also get the low premium that some people would regard as unfair, but an element of the financial services sector as a whole. Fraud, the handling of claims, misleading sales and marketing, incentivizing people. The ones in bold are the ones that are more closely aligned with tech issues. So you have access to data of people like me who pay our premiums on a monthly basis in terms of how much we sleep, how we drive when we drive our cars, and you can adjust the premiums based on that. How transparent are you when these decisions are made by AI, and what are the accountable measures that are in place? Increasingly, unfortunately, we'll also see catastrophic and systemic events. How does that influence the fairness and the risks involved? And ultimately, if you look at the industry as a whole, there are also some risk-related issues around the reinsurance. For me, the trust is a major issue. If you look at all the dimensions or the issues that we looked at a moment ago, and I'd like to argue that this is one also that goes both ways. And I think it is sort of logical to think about this both from the perspective of the insurer itself, but also the insured. So rough estimate is that 5 to 10% of the value of global premiums are linked to some fraudulent claim over the period of a year. And then we also know that unfortunately there's relatively low trust in financial services, with the exception of social media. You can see here from the latest Edelman Trust Barometer, financial services is relatively low compared to other industries, although there was an improvement since the previous survey. Now, trust again features, and this is based on research that I did looking at academic work around AI and ethics. And we can see that by far, trust is the issue that comes up as a major concern, followed by bias, job security, privacy, accountability, and fairness. Many of these issues we've already seen. They are not particular to the insurance industry, but I think this creates the challenge. If you have low trust already in an industry and you introduce technology where there's also a trust problem, clearly that must then lead to some interventions or thinking about how that process can be improved. And I'm coming towards the end of my presentation. I'd like to hand over then to the use cases, but just to come back to a couple of points that I mentioned before. So looking at the industry, we have this sort of the different perspectives from both the insurer, where you are, to the insured, where I am as a consumer. And we also have the distinction between integrity of tech and tech for integrity. So from insurance companies' point of view, clearly you need to think about the fairness, the accountability issues, but also the compliance issues. When I look at my insurance providers, I'm concerned about the use of technology and the impact that there would be in terms of bias or privacy issues, and ultimately also, do I get a fair deal in terms of the premiums that I pay? If I look at the employment of technology, clearly there are some benefits in terms of speedy and accurate resolution of claims, and the way in which you as insurance companies would look at tech for integrity would be to use it, again, not related specifically to the industry, but to detect fraud, to improve granular pricing, but also internally in terms of how you manage integrity in your own organizations, to, for example, use blockchain or other tech to improve whistleblowing. Personalized ethics training is an area that I'm involved in, and many others applications of tech inside your own organization. And then finally, just to bring this back to the Institute and the code of ethics and conduct that you have already, that industry players are requested or obliged to comply with. You see those ethical concepts again featuring very strongly in this code: responsibility, integrity, compliance, competence, due care, etc. And also the presumably more recent additions on AI: act only within the limits of permitted authority, or adhere to employer policies and procedures. I think it's wonderful that it's included in the code, but I do think that there might be ways to integrate it more, that the importance of AI within the industry is reflected also in the way in which it is incorporated into your industry standards and codes. So that was a roller coaster overview of ethics, integrity, insurance, and AI. We'll have time for Q&A at the end, but I'm delighted to hand over now to Jennifer for the next part of the presentation.
Thank you so much, Daniel. Can somebody just let me know if you can hear me?
We can hear you, but I can't see you.
That's fine. I'm going to have to stay off camera for connectivity reasons.
Okay.
If that's okay.
Yeah.
So apologies for that. So thank you so much for that, Daniel. That was absolutely excellent, really insightful, and a brilliant segue into what I'm going to talk about and what Pedro is going to talk about. So I am going to look at artificial intelligence through the underwriting lens. Okay, so that's basically the processes through which we accept risk and then through which we price risk. So there's absolutely no doubt that AI is transforming how we assess and price and accept risks. Underwriting decisions are increasingly being made or supported by algorithms. So that's where there's kind of a hybrid approach, where there's an artificial intelligence model going part of the journey, but a human in the loop is actually finishing it off. Using AI for underwriting purposes is absolutely fantastic. There are huge benefits to it, and I'll talk about them shortly. But it does also raise new ethical questions alongside regulatory challenges as well. So Daniel, can you move on to the next slide, please? Thank you. So AI, and in particular machine learning, which is a subset of AI, is absolutely fantastic at making quicker underwriting decisions. And that's because machine learning can learn huge patterns. They can learn patterns in huge amounts of data very, very quickly. And they're able to do that, machine learning models, by processing huge amounts of data really, really quickly. What they're doing is absolutely not rocket science. The mathematics is actually quite basic, but it's just happening very, very quickly. And now we can process huge amounts of data very, very quickly. And really importantly, these machine learning models can actually recognize and identify patterns and relationships in data that may never be obvious to the human eye. So machine learning models and AI models in general can make use of lots of different types of data now. So traditionally, we would have used what we call structured data, so data that exists in the form of a table. But now we can actually capture lots of different types of data, so unstructured data, for example, audio transcripts, email data, so data that's held in emails, for example, complaints, etc., and even image data. And that allows us to join a lot more dots and identify really, really rich insights from our data. So artificial intelligence, in summary, allows us to segment our data at a much more granular level. And that's because it can do all the things I spoke about. It can analyze huge amounts of very diverse data. It can do it very quickly, and it can identify really, really rich patterns in the data, a lot of which may never have been visible to the human eye or would have been able to be captured by the human eye. So that means that underwriting decisions can be made much faster, so they can be made at a much greater scale. However, and this is the challenge, because we're making decisions much, much quicker and we're making them based on huge amounts of data, there's a lot less human visibility. Underwriting outcomes, as we all know, directly affect society's access to protection, so access to insurance cover. Also affordability of cover in terms of whether a premium is rated or not. And as a result, has a direct impact on customers' financial resilience. Next slide, please. Thank you. So we know that insurance works by assessing and differentiating risk. And that's traditionally been based on factors such as age, health, occupation, claims history, for example. So the ethical challenge in terms of or in respect of using AI to help us with our underwriting is not whether we should differentiate. We've always been differentiating, rather how far differentiation should go. Because as we know, insurance is built on the principle of risk pooling. We've always been differentiating, but where do we stop and where should we stop for the optimal outcome in terms of fairness, affordability, inclusivity, and efficiency? Next slide, please, Daniel. So AI-powered underwriting allows us to move from current or the traditional group-based pricing approach to highly individual pricing if we believe that this is the correct approach. AI-powered underwriting generally involves complex models that, as a result, are often more difficult to explain, but on the plus side can identify unexpected patterns that can help us with our risk segmentation and our risk pricing. AI-powered underwriting may rely on data that customers might not actually realize is being used in the underwriting process, and that's really important. We know that one of the trade-offs with AI-powered underwriting is reduced visibility. It can be much more difficult. Now, not always, but can be much more difficult to actually see and understand the decision logic that the AI model has used in determining its outcomes. And that's from a customer perspective, as well as an insurance employee perspective. So the risk here is the decisions become much more powerful, so much more effective from a predictive power perspective. But the trade-off is that they can be much less transparent, and we need to be really, really mindful of that trade-off. Next, please. Okay, so I think we're missing a risk because we've gone straight to key ethical risk 2. Do we have key ethical risk 1 there? Okay, we'll go with key ethical risk 2 then, which is the lack of explainability. So customers and regulators increasingly expect. Oh, so there we go. Yeah, that's fine.
I'm sorry, they were just in
no problem
order.
And that could have been my fault as well, so apologies everyone for the confusion there. So the first risk which AI underwriting poses or generates is the risk of bias and discrimination. So AI can, if unchecked, unintentionally disadvantage certain groups. The output of AI models is a function of the data on which AI models have been trained. And that historical data may reflect past inequalities, which can be perpetuated if not identified and left unchecked. Some variables can act as proxies for protected characteristics, so ethnicity, maybe income level, gender, social background, even if those protected characteristics are not used directly. So the outcome is that certain groups systematically face higher prices or may actually be excluded from cover completely. Back to ethical risk 2. Thank you. So the second key risk, which is generated by AI-powered underwriting, is the lack of explainability that I've mentioned already. So our customers and our regulators increasingly expect answers to questions such as, why was I declined for cover? Why was I not accepted for cover in the first instance? Why did my premium increase? I wasn't expecting it to increase. And what could I change to change the underwriting outcome? So the challenges we have when using complex AI models is it's often more difficult to provide customers and regulators, so all of our stakeholders, with clear and meaningful reasons for the decision outcomes. And as a result, it's much harder for staff as well to challenge those model outcomes and validate the model outcomes. So there's a real risk due to the lack of explainability of certain AI models that we build a computer says no culture, which would be really unhelpful and very much suboptimal. So any decisions that are taken or outputs of AI models that are used in underwriting decisions should be understandable, and we should be able to challenge them. Next, please. Finally, yes, the third key risk, which is generated by AI-powered underwriting, is the use of data and customers' expectations around that. So AI models used in underwriting can use lots of different types of data, as I mentioned earlier, and that's one of the huge benefits of AI models, is that they can capture huge amounts of very, very diverse data, both structured data, traditional data, as well as unstructured data like emails, audio content, image content. And it can be behavioral data, geolocation data, maybe lifestyle or wearable data, and it can also capture digital activity patterns. And key ethical questions then that we need to ask ourselves when using this type of data in our AI underwriting models is, would customers reasonably expect this type of data or this level of data, this granularity of data, this personalization of data to affect their premiums? Is the data relevant to the risk that's being insured, or is it purely predictive? So it may be powerful in terms of predicting an outcome, but maybe it's not actually relevant to the insurable risk itself, and in which case should we actually use it in our underwriting models? Does actually sharing more data become a requirement for affordable cover? Key ethical issue here is that customers' consent alone to use their data does not always make something actually fair. Next slide, please. Okay, so we all know, we're a very select group here, and we know that insurance is a really, really important and powerful social utility. And traditionally, insurance has pooled risk across society, and that's one of the real benefits of insurance. It supports people when things go wrong, and it spreads the cost of misfortune. Highly granular AI underwriting then, which segments policyholders or customers down to potentially an individual level, results in lower cross-subsidies across our societies. It may result in higher prices for groups which are already vulnerable, and some risks may become effectively uninsurable as a result of AI-powered underwriting. So a question we need to ask ourselves in terms of determining the optimal balance between predictive power and risk pooling is, how do we balance accurate pricing with maintaining access to protection, so maintaining that inclusivity of coverage. And next slide, please, Daniel. So if we are going to use AI, and I'm a huge advocate for using AI in industry, including in the insurance industry, which I'm most familiar with, we need to be very clear about how we're going to use it so that we're using it as optimally as we possibly can. So firstly, we need to define clear principles. We need to define what fair underwriting means for our organizations and why we have come to those conclusions. Secondly, really, really important that we continually monitor bias, not just when our AI models are being used, but also when they are in production. We need to continually test underwriting outcomes and decisions across different customer groups. And we need to look at impact, the impact on customers, and the impact on the company, the impact on people who have not been accepted for cover. We shouldn't just focus on the accuracy or the predictive power of the underwriting model. So thirdly, human oversight, absolutely imperative. The good news here is that AI is not going to replace humans, because we'll always need human in the loop, particularly if we're going to use AI for underwriting purposes. We need to empower underwriters to question model outputs. What I would hope would happen is that AI will do an awful lot of the heavy lifting and allow humans to spend more time using their critical thinking and judgment skills. We need to define clear escalation routes where there are concerns around the output of an AI underwriting model. And finally, transparency, absolutely critical. So important that we document our data sources thoroughly and the purpose of our models. If we can, we should choose white box models over black box models where possible. So when we think of AI, we generally tend to think of black box models where the decision paths are very, very opaque. And lots of AI models are black box models. It's impossible to see how the model has actually made its decision. But it is important to recognize and acknowledge that there are a number of AI models called white box models, which can be almost as powerful as black box models, but which are inherently explainable. So it is actually possible to see how the model has come to its decision. Where black box models are used, so where in the case where a white box model just isn't powerful enough, for example, or isn't appropriate for the data that we're using, it is really, really important that we ensure explainability techniques are used in the development of the model and in the monitoring of the model performance. And there are lots of explainability techniques out there now, which can help us understand the logic that the model has used. And we should always be ready to be able to explain the decisions to all of our stakeholders in plain language. Next slide, please. So finally, am I advocating for AI to be thrown in the bin when it comes to underwriting? Absolutely not. I think it's going to be a really, really powerful tool for us. And I think it will do an awful lot of the heavy lifting for us and hopefully deliver more accurate insights into our data and better outcomes for everyone, for all of our stakeholders. AI gives us unprecedented predictive power, and that's a huge benefit of AI. But with that power comes responsibility. We as insurers influence who can access financial protection. We shape affordability for our customers and inclusion across society. And we affect public trust in insurance as a whole. So applying AI ethically through underwriting is absolutely not about slowing or delaying innovation. It's about making sure that innovation strengthens trust, fairness, and access to insurance. So we need to handle this with care, but absolutely embrace it. Thank you so much. I'm now going to hand over to Pedro, who's going to look at AI through a claims use case.
Hello everyone. Thank you very much, Daniel and Jennifer, for that. Very interesting. I'm going to focus on what I think is a very practical use case. I think the audience is going to benefit from this remote format, not being in the room with me, because if there is something I really like doing, is putting people on the spot, because I think that's when the challenges of doing ethics right become clear, or at least more individualized, as people will ask you, or Pedro will ask you, how do you do that? What do you mean? What if this challenge comes across? So since I'll have to do it all here, I'll be wearing two caps, one defending the use case, another one challenging it. So my use case focuses on something that is not that fictional. Let's assume an insurance company, motor insurance, home insurance, and then they develop an app that you download into your phone. And whenever you have to make a claim, you record a video of yourself explaining what happened and what your claim is and what you think you are entitled to. There is also functionality, so if you need to support any additional documentation, you can do so, and other pictures or receipts or whatever. And then the app will link with some AI in the background, and that AI will try to detect if there is any fraud involved, if it is likely to be fraudulent claim, or if there is merit on the claim. So assuming all goes well, you will see your payment within minutes, and you'll get the money in your bank account. That's probably why the person in the phone there, the image to the right, is so happy. The typical insurance customer happy to be making a claim, and even happier because the money arrived before he finished the transaction. And what happens if the claim doesn't go through like that? So say it's flagged for potential fraud. Well, that's passed on to a team where a team of individuals or a human will do a manual review. It could also happen that the claim is not clear-cut. The AI cannot settle it confidently. So rather than saying no, I'm being wrong, or saying yes, I'm being wrong, it will pass it on to a team of individuals. In those cases, the claim is not going to be settled that quickly. It's going to take maybe weeks or months. So if you're not using that app, you still have the option to use your old-fashioned paper forms or maybe a web-based form, but that always goes through a human review. So that's always going to be weeks or months delayed before you hear from the insurance company. I think this is a wonderful thing. It's fantastic. It's very convenient. It's fast. It reduces costs for the insurance company. But now, can we scratch our head and find some ethical issues here? Yes, we can. That's the short answer. Is it benefiting everybody or everybody equally? And how about the individuals who don't have access to a smartphone? And as hard as it is to believe, they do exist. So maybe someone doesn't have the money to buy it, or maybe they don't trust these apps on the phone, and God knows what data is sharing and going up and down the internet, or or maybe they're just not digitally literate. So these people will never have their claims settled in minutes. It's always going to be weeks or months. So how do we feel about that? There is also the reality that the more barriers there are to make a claim, the more likely it is that that claim will never be made, regardless of merit. So we could be having people who, with valid claims, that just see the paperwork and the process, unless they use the app, so cumbersome that they just don't file it. And that leads to financial exclusion and some other issues. Now, let's say someone could claim that we are discriminating against them. Now, the truth is, like, we never set out to discriminate, but it could happen by accident. How about people like myself, where English is not your first language? How would the video cope with that? And maybe you'll always just be referred to an individual because the AI does not manage your accent very well. That happens to me all the time with the speech recognition software. It doesn't really do that well with me. So are we then discriminating against foreigners or non-English speakers? No, that's controversial. But how would we defend ourselves? If we were the insurance company, I would say, well, but we're benefiting already a lot of people. We've moved from everybody having to wait for weeks or months to having most people have their claims settled in minutes. And that's a wonderful change. And we cannot be expected to do so well in every conceivable case. But then who are we leaving behind? Just the people who are probably most vulnerable, the people who are always being left behind. We could also have issues with neurodivergent individuals who display themselves with a different body language that is common amongst neurotypical. How will the AI detect them? Maybe say like that looks a bit odd. Maybe it's fraudulent being referred to for human review as well. Or even people from other cultures where they laugh when they're nervous, or maybe somebody who is not comfortable. Again, an autistic person or someone who's not very good with English and writes it all down, so it's going to read it in front of the video, and the AI algorithm says no one gets the story right like that. That's clearly indication of fraud, and it's been for review. So those people will eventually see their claim and based on merit settled. But there is an inconvenience, there is a delay. Now, they're not going to see the benefit within minutes. It's going to be weeks or months. And I think the key ethical question for us is like, well, is the fine? We say, well, we've done something fantastic already. Should we just leave it there, or should we do more? And if we can do more, what is that? How do we do more? I think those are the ethical questions we can consider in this case. Should the benefit of a much larger group justify I wouldn't say discriminate, but leaving others behind? And also, we need to consider that those are the ones who are always being left behind, the more vulnerable groups. So what if we get a challenge? A consumer, one of these groups that looks after the rights of consumers, claim that we are discriminating and it is against the law. Well, do we throw the app so everybody now has to go through the old-fashioned forms and wait weeks or months, or do we carry on with the app with the potential risk of continuing with that discrimination? I think those issues are worth considering. And then very briefly as well, we might consider the incentives of those who are, I would say, the human in the loop, the people who are reviewing the claims when they are considered maybe fraudulent or that cannot be settled confidently by the AI. What incentives do they see? Are they going to be paid based on how many claims are reviewed or how many are turned down? That would definitely influence the quality of the review. If they receive a bonus based on the number of claims, we might realize that they are simply rubber stamping whatever the algorithm says in order to review as many as possible and maximize their financial reward. So it's easy to still get in trouble from an ethical point of view, even when you're trying to do something that is right. You have the best of intentions, and still just by lack of awareness or poorly designed process or perverse incentives to still get something not as well as we would like it. And I think with that, I'm going to leave it for the Q&A. And I think that maybe you'll have some questions that you'd like to see answered or see our opinions on that. So I'm going to leave it that. And thank you very much for your attention.
Pedro, thank you so much to both you and Jennifer for these fascinating use cases and illustrating the tensions that you often get between the power on the one hand and the responsibility or the risks, but also the opportunities. I will stop sharing my screen now. We have about 10 minutes, perhaps slightly less for Q&A. As we mentioned at the beginning, please use the Q&A function and we'll try and get through as many of those as possible.
Daniel, Jennifer, Pedro, thank you so much for a fantastic lecture. I'm going to just start with a couple of the questions. First one is, how far have we moved from questioning how much damage AI can or could do in underwriting cases to a situation where it can be demonstrated that AI underwriting can be done safely and that the controls in place can give insurance companies comfort that AI risks are well managed and under control?
Will I take that one?
Great, Jennifer.
Yeah, so thank you for the question. It's a really, really excellent question. Personally, and this is my own personal view, I don't think we're there yet. I think we're at a stage where we realize, we can use AI to process applications much more quickly. I don't think we're in a position where we can confidently say that AI will deliver the right outcome for every single individual case. And I think we will get there. And I think what we need to establish is where the human lies in the loop. At what point we were able to what point we're able to rely on an AI model, and where human intervention kind of takes over from. And because it might be the case, that AI can accurately capture or can actually accurately deal with 80% of cases, but you've got 20% of cases, residual cases, where you still need a human in the loop.
Thanks, Jennifer. There's a question and a couple of questions around how will the regulator conduct inspections to underwriting and claim settlements when decisions are made by AI systems?
I don't know, but I know we're going to have a talk by Anne Muldoon, aren't we, in a few weeks?
Yes,
so I'll be
2 weeks' time.
Really keen myself to hear what she has to say as well.
I'm going to add something there, if I may. I don't think it is AI making decisions. If we let AI make the decision, that's our own decision. That's people making the decision of not checking AI. So obviously this is my own personal view, but I don't think any supervisor is going to accept the answer. Well, that's what the computer said. No, that's what you let the computer dictate and you went along with it. I think that'll be the most likely take.
And I suppose, Pedro, this question kind of follows up. Do we have a workforce and expertise to use AI ethically?
Well, that's a complicated question. I would say a key question would be what is ethically? And I think we all think we know what we mean by that, but I think the more you start talking with people about it, the more realize we all have a different view on what ethically means. I would say, from my point of view, we need to do a lot of work to embed the ethical practice within insurance companies. I think at an individual level, there is a lot of interest. I think, generally speaking, insurance companies tend to want to do the right thing, but I don't think there is an awareness of how more dedicated the focus needs to be when it comes now with AI.
I agree, Pedro, and I think we need a set of ethical guidelines or parameters that the industry needs to work within. I think we'd all benefit from that, and I think we need the regulator to collaborate on that.
I would support that as well. I think the guidelines are really important. The one thing that I would add to that as well is I think that it would be important for everybody to have a really basic understanding of how the technology works. It links back to explainability, but I think we do run the risk. The philosophers talk about anthropomorphism, where we almost believe that AI is this sort of living thing that is communicating with us, and it doesn't help, Chat GPT saying, I'm doing this, I'm doing that. So we need to demystify it to some extent. We need to be able to explain the very basics in terms of machine learning, large language model, without going into technicalities. If you have that and you have clear guidelines, then I think it becomes a lot easier to have some level of assurance that the deployment will be ethical and responsible.
Can I just end on one final question? I suppose, who is accountable for AI-driven decisions, especially when errors occur?
I think the insurance company is accountable, absolutely.
Pedro, Daniel, have you anything to add?
Well, I would say your AI policy probably should tell you who's accountable in each case. I think ultimately, if it has very significant consequences, you're probably thinking that the board of the insurance company has the ultimate responsibility. But your AI policy is the answer.
Yes.
Yeah, I would agree with that. And ultimately, it comes back to accountability and the governance structures inside the organization. Ultimately, it will be leadership, or even beyond that, the board of directors that would need to take ultimate accountability. You cannot discipline a computer for making a mistake. There's always something behind that, and we need to be conscious of that.
I'm conscious of time, but I just want to say thank you so much to Daniel, to Jennifer, and to Pedro on an excellent, thought-provoking presentation today. I think, as you said yourself, it's probably given us more questions, and ideally that's what this series is all about, is to give us that kind of, make us all think and challenge ourselves, both individually and as a profession and as an industry. What do we need to do to deal with the future that we're facing at the moment? So on behalf of all the members, as you could see by the numbers, over 2,000 joined us here today. It was an excellent presentation. So thank you to each and every one of you for all your time. We know how busy you all are. Just to finish up by saying that our next AI and insurance lecture is the 17th of February, and it's Anne Muldoon from the Central Bank of Ireland. We raised some of those regulatory questions today, and we're looking forward to the presentation from Anne and her colleagues in the Central Bank. So thank you all for joining us today. We really do appreciate your time on this really important topic that as a profession we all need to make sure we're upskilled in. So thank you each and everyone. Thank you Daniel, Jennifer and Pedro once again on behalf of all the members who joined us here today.
Thanks everyone.
Look forward to seeing you again.
Thank you. Bye.
Thanks everyone. Goodbye.
Thanks a lot everyone.
Bye.